Dear shareholders, I'm pleased to inform you that in the 6 months ended 31st December 2011, we outperformed both our headline KPIs and posted another big increase in profit despite challenging global economic conditions. We recorded an annualized return on equity of 16.2% against a target of 16% and an annualized 16.3% growth in loans and debt securities, well ahead of our 12% target. We maintained our pole position in Malaysia and consolidated our position as one of the top ASEAN banks, and in our quest to create value, we have also been achieving improvements region-wide across all our business segments. In financial period 2011, our profit after tax and after minority interest advanced 20% year-on-year to 2.58 billion ringgit. Revenue grew 21.6% year-on-year, with fund-based income up 16.2% and fee income climbing 32%, partly as a result of the first-time revenue contribution from Kim Eng. Most business pillars recorded a double-digit revenue increase, and we saw continued expansion in both consumer and corporate business. Profit before tax jumped 597 million ringgit, gaining 20.1% year-on-year. Community financial services rose 18% to 1.69 billion ringgit. Global wholesale banking by 35.7% to 1.25 billion ringgit. International banking by 19.4% to 977 million ringgit. And insurance and takaful by 323.1% to 386 million ringgit, mainly due to an actuarial valuation surplus. Loans growth for the group grew 16.2% on an annualized basis, largely due to strong overseas loans growth of 28.7%, while domestic loans grew 10% on an annualized basis. Allowances for losses on loans also improved, declining 13.9% year-on-year, while the net impact loan ratio improved to 1.87% in December from 2.18% in September. Our financial position remains strong, with group shareholders' funds of 33.4 billion ringgit, total assets of 451.3 billion ringgit, and a capital adequacy ratio of 16.3%, assuming an 85% dividend reinvestment rate. The restructuring of our operations into the three pillars of the House of Maybank started to make a game-changing difference to the customer experience. Under Community Financial Services, or CFS, our branches were given a fresh new look, and we launched our latest flagship branches with a hip and cool one-stop shop concept. We continued to improve service quality, average waiting time, and turnaround time. We embedded retail SME services across our branch network, and a tactical plan is now in place to further develop SME business. Global Wholesale Banking, or GWB, retained its leadership of Malaysia's corporate banking sector, while enhanced cash management capabilities enabled GWB to capture additional wholesale deposit in line with its mandate to become a regional wholesale banking powerhouse by 2015. The integration of Maybank Kim Eng progressed on track, and by leveraging on its regional distribution, the firm further boosted its brokerage business. As well as launching a raft of new products, our insurance and takaful arm, Etika, reinforced its capital strength, and the new IT infrastructure went live. In pursuing our strategic objective to become a global leader in Islamic finance, we are leveraging on our domestic leadership position to expand in Singapore and Indonesia, as well as exploring markets as far afield as Hong Kong, the Middle East, and London. At Maybank, our people are energized with humanizing financial services. What this means, in practice, is empowering our customers by providing them with convenient access to funding, offering fair terms and pricing, advising them based on their needs, and being at the heart of the community. Across all our business units region-wide, we are now humanizing client interactions by providing consistent, integrated, and holistic financial services. Our regional client coverage teams have improved the effectiveness of our client relationships. At the same time, through our Maybank One strategy, we are deploying a multi-channel business model based on a branchless concept that further strengthens our consumer accessibility to financial services. But while systems are important, in the end, it is our people who drive our mission to humanize financial services. Hence, our continued emphasis on embedding our core values of teamwork, integrity, growth, excellence and efficiency, and relationship building, aptly coined as TIGER, if you like. We continue to prioritize strategies to intensify employee engagement, which has led to measurable improvement in service quality. Our transformation is backed by a major investment in our IT Transformation Program, or ITTP. The benefits of these systems, process, and control enhancements will soon be felt by our customers and will give us a material edge over our competitors. Strengthening our capital adequacy in line with the capital requirements of Basel III remains a high priority. As at 31st December 2011, our core equity ratio stood at 9.13%, assuming an 85% dividend reinvestment rate, comfortably ahead of the 7% required by Bank Negara by 2019. To further boost capital adequacy, we will be continuing with our dividend reinvestment plan, which has been effective in meeting the needs of our shareholders. Last year, we introduced a refreshed logo and brand identity for Maybank, and we pushed ahead with our brand building exercise, aligning our brand strategy with our business vision and creating region-wide consistency. One major initiative involved name and logo changes for our subsidiary Kim Eng Holdings to Maybank Kim Eng, and rebranding of Bank International Indonesia is also in progress. Ladies and gentlemen, as we look ahead in 2012, we see that uncertain prospects for the global economy and turmoil in the Eurozone will have an impact on the local and regional economies. But although this will dampen consumer sentiment, we still expect to see encouraging growth in the markets where we operate in, particularly in ASEAN countries. The interest rate environment in Malaysia is expected to remain stable and conducive for economic growth. We will also benefit from Bank Negara's Financial Sector Blueprint 2011-2020, as well as the government's Economic Transformation Program, or ETP, both complementing the development of the financial services industry. To increase profitability, we are focusing in putting in place regional support infrastructure, realizing synergies from regional distribution networks, and achieving region-wide consistency in our systems and applications. We will also be optimizing costs and resources across the group. Meanwhile, we will step up our domestic funding capabilities in our overseas markets and, subject to regulatory approval, simultaneously expand our regional footprint by opening branches in Beijing, Laos, and Myanmar. Dear shareholders, what we achieved so far we owe to the determination of our people at every level to drive the business forward, and I offer them all my heartfelt thanks. We owe a debt of gratitude as well to all of you, our shareholders, our customers, investors, partners, and associates who have again stood by us with exemplary loyalty. We also deeply appreciate the support and guidance we consistently received from Bank Negara Malaysia, the Securities Commission, the Monetary Authority of Singapore, Bank Indonesia, BAPEPAM, Bank of Central Philippines, and the other regulatory authorities in ASEAN and other countries we operate in. Thank you.